Hey, what's going on, guys? I wanted to make a real quick video on how I identify support and resistance and where to place a stop loss if it doesn't go in your favor, if it's not in your favor. Well, first you're gonna have to identify your support and resistance levels, and you definitely don't want to get in from like say it pushes up. You don't want to get in right here, only because say you did get in right here, what if it fell? Now your risk is higher than your reward, which honestly doesn't make sense. So what you want to do is identify your support and resistance, and the way that I get it, I always go back to at least like 180-day 4-hour chart. Ignore all the lines. I trade Apple so many times. All right, and then just look at whatever's closest to this right here. So in this case right here, it would be this right here for my resistance level. So I identified this right here as my resistance level, but of course I've had that line on there for a while. But so once you have that right there, since it's on that level right there, then go back to your 1 day 5 minute or 1 day 1 minute chart. So once you got that going, this is that line that I identified right here. Now when it comes to support or even resistance, I like to look at pre-market hours and see what it did. So it went right here for the lows. Didn't really include that. That was just a real quick spike. And then right here were the highs, pre-market highs. So if it went below this right here, obviously Apple would be a good short, but if it broke pre-market highs, then you would go long on the stock. So for example, let's take Apple. So pre-market, this was the high. So right during market open, the first 5 minutes, this is a 5-minute chart right here. So let's go on. I like to look at 5-minute chart only because you get a more detailed, it's more detailed to me when it's on 5 minutes. All right, so during market open, it actually broke pre-market highs. Now when it breaks pre-market high, what you want to do is don't get in here, wait for confirmation. I don't ever trade the first 5 or 10 minutes because the volatility is crazy. So what you want to do is, if it breaks pre-market high, just wait for the pullback for the confirmation. Once it pulls back, which right here, this is the pullback, I would get in right here. Okay, so I'd get in right here, and then your exit point, if you're a scalper, so I'd get in right here and probably exit like around this area right here, even if it went higher. I'm more of a scalper. I don't like holding for long periods of time. I just don't feel comfortable, especially in this market with the coronavirus and all that and everything going on, all the news coming out. Everything is just crazy. So what I would do is I would get in right here. I would set a limit buy right here. And you don't want your stop loss to be too close. So you don't want to buy here, then make your stop loss right here, because there's market makers that will stop you out, and then it would go right back up. So say you put your stop loss here, market makers can actually see your stop loss. So they would actually go take your shares, and then you'll see it reversing. Let's see if it did it. Okay, for example, just like this right here. Okay, so say you bought here, but your stop loss was like right about here. Market makers can see that. So for example, it's going to trigger your stop loss, and then it reverses back up. I'm sure you guys seen that a lot, where you would put your stop loss right here, and then you would get stopped out, and then it reverses on you. That's because market makers see that. So you got to keep it away from this line here. You're really not giving it enough time. That's you got to make it, keep it away from where the where the support is. So another thing you can do, let me just show you. So for example, right here, it hit it again, and then it went back up. Now another thing you can use for a stop loss, say you go to studies, there's a thing called ATR. Let me X out of this real quick. Okay, there's a thing called ATR, which is this right here. Let me add that, apply. Okay, so now this is your ATR right here. What this does, this pretty much calculates the volume and how much a stock moves within that minute. So say I did the one day 5-minute chart, it'll tell me how the stock moves within 5 minutes. So in this case right here, it moves about 52-53 cents. Okay, so say I got in right here. Okay, so say I got in right here. I'm not going to put my stop loss right here because it moves about 53 cents within 5 minutes. So I would keep my stop loss about 50, about 60 cents, just to keep it on the safe side. That's what I would do. Now, example with this right here, okay? Now, say you purchased again at support, and then you put your stop loss here, you would have got stopped out by market makers. So it's showing 53 cents. So this is 53 cents, about right here. So that's what I would do to keep it away from your support line, because the market makers are not going to go 50 cents to $1 down, stop you out, and then go back up. It doesn't happen like that. They do it within cents, closer to your either resistance line or your support. So ATR is a really good thing to use because it pretty much gives you a good idea of how a stock moves within your hourly chart, your 5-minute chart, your 1-minute chart. So in this case right here, you would have seen that this stock is moving in 5 minutes, it moves about 52 cents within 5 minutes. So say you did purchase here, then your stop loss would have been like about right here. Like about right here. The market makers would have not triggered that, and then you would have been fine, and then you would have profited like once you got here. Again, support, and then you sell. So if you're a scalper, you buy at support, sell. Buy at support, sell. That's pretty much what I go by. That's how I use my stop loss, where I plan on putting my stop loss, how I identify where I want to put it at. You definitely don't want to put it too close to your support because you will get stopped out, and then it's going to reverse right on you. Yeah, but I really just wanted to keep this short. But don't always depend on indicators. Just always have a plan. Always identify support, resistance. Don't just get in for the sake of getting in. Just follow your plan. Always have a stop loss, whether it's a mental stop loss or a hard stop loss. Me personally, I do not like to use hard stop losses only because of market makers. But if you are a beginner trader, I would definitely use a hard stop loss, because what's going to happen is if you don't use a hard stop loss, let's use Target for example, because they had earnings today. Okay, say you purchased here, right? Now you saw this big green candle and you're like, oh great, this is good, let me just do this right, let me get in right here. First of all, there is no plan. You're just going to get in for the sake of getting in. So if you get in, you're going to see this thing start reversing on you. And then without a hard stop, you're going to be like, you know what? I'm down about $90 now. And then now I'm down about 100. You know what? Let me wait until it goes back to 90, then I'll cut losses. But then what's going to happen is it's going to keep going. It's going to keep tanking, and then you're going to end up messing up your capital. You're going to lose money. So always have a hard stop if you are a beginner or you're not good with cutting losses, because you always have to have a plan when trading. Never get in for the sake of getting in. You will lose your account. Another indicator I like to use, but of course don't ever depend on indicators. I like to use my my EMA lines, which are, I've got a 9-day and a 20-day EMA line. I usually get in within the first 5, 10, maybe 15 minutes. And once I see the candle, the second candle, go above, once that it crosses, like let me show you right here. Okay, see how the blue line crosses and then the yellow line goes over the blue line? That's how you know it's a short position. Now it's going to go down, and right now it's just consolidating. Once that goes over, like this right here, once it cuts and goes over, then you can go long on it. But of course, never depend on indicators. Just always have a plan. In this case right here, I identified my support and my resistance, so that's when I get in. I would get in here, but I would wait until I get confirmation. So in this case right here, I waited This is a 5-minute chart. So I waited until it bounced back off of here, and once it did that, I got in and then I sold about right here. But that's the best way to do it. If you have a hard time identifying where to place a stop, just put the ATR studies on, and it's going to automatically calculate how a stock moves within your 5-minute, 1-minute, hourly, 4-hourly chart. That way you can at least, you'll have a better idea of where to place a stop loss, instead of you creating your support, finding your support, and then putting it, like, say for example about here, and then you're going to get stopped out by market makers because they do see that. And then best way is just kind of use this right here. If you're having a problem where to place a stop loss, just use the ATR indicator, and then that way you get a better idea of how the stock moves. Because if it moves within 50 cents within a minute, then you definitely don't want to put a stop loss 50 cents below your support or your resistance if you're shorting, depending on what you're doing. But yeah, that's pretty much it. If you guys have any questions, definitely hit me up in the comment section. And if you want me to go over anything else, just let me know and I'll make a video on that right there. Thank you guys for watching.